let's get into our big conversation this morning. Saurabh Mukherjea, founder and CIO of Marcellus Investment Managers, with us this morning. Very good morning, Saurabh, and great to see you on after quite some time. Hope all has been well. Let's start off with where the markets are right now, and we're speaking at an important time where some of the fears seem to be fading, FIIs seem to be coming back. The only question then is the India-US trade deal, isn't it?
I think there's more to it than that. I think the India-US trade deal more likely than not will get done. It makes sense for both countries to do it. I've been saying this ever since the tensions broke out. I think the bigger question is, will we see a earnings recovery? Earnings growth has been weak for the last 6-7 quarters. Will we see an earnings recovery? The stimulus that the government has imparted through income tax cuts, GST cuts, the RBI has done its bit through 4 rate cuts. Is that enough to juice up consumption growth and generate an earnings revival? I think the jury is still out on that. My reckoning is we'll have a decent quarter. The current quarter will be decent on earnings growth. I think this is potentially the first quarter of double-digit earnings growth after 7 or 8 quarters. But I think a longer-term earnings revival will depend on job creation, especially white-collar job creation, and that's something I still don't have full visibility on.
I just want to come in a little more detail to the earnings outlook, and that's quite an optimistic note you've struck, Saurabh. That double-digit growth after 8 quarters. Where do you think the pack is being led by? Is it banks that is giving you, the most confidence right now? IT has also performed better than expected.
I think the let's start with the obvious stuff. Clearly, the GST cuts have helped the auto sector. There's been spectacular numbers from the auto sector. I've never seen so many cars ever get sold in my life. There's also plenty of jewelry sales. Unfortunately, I don't think the jewelry sales will entirely reflect in stock market earnings beyond say Titan. But more generally, my reading of the Diwali spending was that even consumer durables will have a good quarter. October, November, December will look up for consumer durables as well, and the credit quality issues which were hammering the banks and NBFCs. By the way, even the September quarter numbers suggest elevated credit quality issues for the lenders in our country. I'm hoping that the October, November, December quarters, on the back of GST cuts, interest rate cuts, and income tax cuts, I'm hoping that October, November, December brings some relief on the credit quality issues. If over and above that, the trade deal fructifies in the next 2-3 weeks, then the export-oriented plays will also have a better November, December than they did in September, October. So all in all, the chances look to me to be more than 50-50 that the quarter to December could be the best quarter for earnings growth in 4, 5, 6 quarters. I think that last time we had double-digit earnings growth, we have to go back 1.5 years. So fingers crossed, but the signs are looking up. This could be the best quarter for earnings growth after 1.5 years.
Hey, Saurabh, good morning and a happy new summer to you.
Happy New Year.
I wonder, Saurabh, if that means that the markets could have a continuation of this bullish sentiment that has come in, independent of what the Nifty does. That's secondary. But can the sentiment stay constructive with earnings growth, or is some bit of trade resolution a necessary condition, even if not a sufficient one?
So I think the continuation of bullishness, I think, is contingent on 3 aspects. My reading is, at the margin, the FII sentiment is turning positive. I think you were referencing flows as well. My discussions with FIIs over Diwali suggest that they're keen to put more money to work in India. Back in America, this whole private credit boom seems to be dissipating, and also the realization amongst American investors that post a US-India trade deal, it does make sense to put more money to work in India. So I think the first driver of sentiment will there be sustained uplift in FII inflows? I stay optimistic on that, but I would also hesitate to give a completely emphatic statement, because I think there are many other variables playing in the FII's mind. So pehla issue is FII sentiment. Second is the US-India FTA. Will it just be a token FTA? naam ke vaste to do something, or will it be a genuine 15% tariff for Indians exporting into America, genuine breakthrough for Indian trade? I'm hoping it'll be a genuine breakthrough for Indian trade. If it is, I think it'll be a significant mood uplifter. And the third is the capex piece. So private capex, the first 6 months of this year, first 6 months of FY 26, private capex has seen a significant bump up. I think it's up 40 or 50%. If private capex sustains in the second half of the year, that too could be a significant mood lifter. So FII, the US India FTA, how substantive it is, and private capex. If these three all turn positive, then I think change in sentiment could last for several quarters rather than being a 3 4 week, a 3 4 month affair.
Got it. Where, Saurabh? I mean, the obvious options or the announcements might be the data centers and the energy transition, but 50% uptick in private capex when the headlines have been that the one thing that is not coming through is private capex. So where do you see this upshoot in capex?
I'm just reflecting on the data that's already been published. So
Haji.
even I was also surprised to see the Business Standard headline that private capex is up 40 or 50%. I think it reflects a few things. I think remember the L&T had said that they've got a big boiler turbine genset order for a thermal power plant in India. I suspect that's a mega capex announcement, and I suspect it's linked to a large conglomerate in India. So if L&T's announcement in there, I think this was in the Q1 results, they had said that they've received a big BTG order for a massive power plant in India. I think that's inside the private capex data. I suspect the massive Google data center in Vizag is potentially also inside the H1 capex. So combination of private power plants, private data centers, potentially some factories coming up. That's enough to give the private capex number a boost. Whatever's happened in H1, it's already in the data that it's up 40-50%. Question is, will the private capex piece sustain in H2? Because remember, government capex has to come off. Given the fiscal pressures that are now mounting on the government of India, government capex will have to throttle off. Indeed, it's already throttling off basis the data I'm seeing. So as government capex comes off, if private capex jumps up in H2 at this 40-50% rate, then I think the change in mood in favor of optimism could sustain into FY 27.
Another interesting space, Saurabh, and we'd love to hear your thoughts, is what's happening in private banking space and the entry of some global partners coming in, whether it's an Emirates NBD and RBL or a Blackstone investing in a federal, IDBI is up for grabs in some part. Do you think that this is the start of an exciting trend, and how would one hop onto it?
So look, I think this should have happened many years ago. My reading is FIIs, foreign banks, foreign private equity were very keen to invest, have been keen to invest in Indian banks for many years. For reasons best known to our regulators, they haven't been supportive of this until recently. So for whatever reason, the regulators have turned constructive on this, and kudos to them. This is the right thing to do. We need more foreign capital in our banking system. The banking system is undercapitalized in my view, and I think RBL is the first of many banks which needs a foreign investor. So hopefully the RBL NBD deal. Remember there was a DBS Lakshmi Vilas Bank deal a few years ago. Hopefully, we'll see many more of that in the coming months. To my mind, there's at least three zombie private sector banks, who are there sort of operating, but not really with any financial muscle. There are at least three zombie private sector banks. I don't want to name them because it's just not fair. But there are at least
I was just about to ask you to name them because
no, some other day.
Yeah.
So I think everybody who needs to know.
That's the quiz of the morning.
Everybody who needs to know who the three zombie private sector banks are knows who they are. But jokes apart, there are people there are private equity firms who want to put money to work. Historically, they've been stymied by discouraging words from the powers that be. Now I think the tide has turned. The powers that be have realized that we need foreign private equity and foreign strategics to buy Indian banks. So let's hope that Blackstone Federal Bank and Emirates NBD is the start of a new trend where plenty of foreign money pours into private sector banks and gives the banking sector a lift that it really needs. Because remember, credit quality will stay under pressure because of the weak job scene, and especially the southern Indian tech hubs. The job losses in the southern Indian tech hubs is going to create more credit quality pressure in the coming quarters. So foreign capital much needed in Indian banking.
And does this place private banks in a more desirable space versus public sector banks right now?
I think the public sector banks are going to go through a repeat of what they went through in that traumatic decade from 2010 to 2020, right? In that decade, they got pulverized on corporate credit quality. This time around, I think the public sector banks will get pulverized on retail credit quality. The deterioration in credit quality that started, say, 3-4 quarters ago, I think we're in the early stages of a downside in credit quality. I think barring ICICI Bank, HDFC Bank, and SBI, I'm not seeing too many other banks being able to deal with this downturn in credit quality, which is why I think we need foreign capital to come in and inject fresh equity into the Indian banking system. They'll naturally do it in the private sector. Government, I don't think, will allow public sector banks to be taken over by foreign bankers. So natural entry for foreign banks, foreign private equity in foreign banks will be via the private sector. And as I said, there's at least 3 zombie private sector banks which could do with significant infusions of foreign capital.
Got it. Wow. Saurabh, just the other piece, I mean, you know, these transactions, $7.5–8 billion worth of transactions in banking is one thing, and that's certainly set this flurry. But do you believe that earnings growth for the next 3, 4, 6 quarters could be led by lenders? Because there might be, if the private capex is up 50%, some of it might be done by internal balance sheet, but I'm sure lending will come into play, right? So could lenders lead the earnings growth for the next 4 to 6 quarters?
So if you think about it, Neeraj, as to how the bank Nifty is constructed, the bank Nifty effectively is 3 banks, right? Although Chota banks are there, effectively the bank Nifty is 3 banks, and those 3 banks are in good shape. They're in good shape in every sense of the word: credit quality, balance sheet, tier 1. So I think there are more rate cuts to come. The Fed will cut. I think the RBI will have to cut. There's no argument for the RBI not to cut. So as the RBI cuts further, it's also interesting that the bond market is tightening. If you look at the spread of the single A bond over the Government of India 10-year, the bond market is tightening. So it's becoming more expensive for companies to borrow in the bond market. And therefore, I think the top 3 banks in a rate down cycle will pull away market share, not just from their smaller rivals. I think the top 3 banks will also pull away market share from the bond market. So we've got a large holding in HDFC Bank for many years. We also have holdings in ICICI Bank as well. We don't have SBI, but we do have the other 2. So I'm optimistic that the rate down cycle and the consolidation of market share in favor of the top 3 will help our clients make money from HDFC Bank and ICICI Bank.
Of capital piece as well, Saurabh, today we have to wrap this up, but I think in the next few days, Saurabh, we should try and do a piece on what is that one standout theme that could drive conversation, earnings, and everything else in India for 2026. So before the end of the calendar, Saurabh, look forward to doing that on this show with you.
Look forward to that. Thank you for inviting me.
Thank you. And both Taman and me, thank you for joining in today and wishing you a new Samvat.